Londra İstanbul hattında piyasalara özel bir parantez açıyoruz. Bugün çok değerli bir konuğum var stüdyomuzda. Cribstone Stratejik Makro'nun kurucusu, STJ Alpacar'da kıdemli danışman ve Syracuse Üniversitesi'nde yardımcı doçent Mike Harris'le birlikteyiz. Mike, hoş geldin yayınımıza. Seninle Türkçe konuşmayı beklemiyordum ben de aslında ama bir Türk kökeni var. Türkçe de biliyorsun galiba, değil mi?
Biraz biliyorum. Bakalım nasıl olacak.
Evet, yani böyle %60-70 Türkçe biliyoruz galiba.
Evet.
Şimdi Trump'la gerçekten büyük bir sürpriz oldu piyasalarda. Bu kırmızı dalgayla piyasanın kaderi değişti mi?
Biraz İngilizce anlatabilirsem biraz daha kolay olur.
Tamam, İngilizceye dönelim.
Özür dilerim ama net konuşmak istiyorum. So the market obviously initially likes Trump's victory, but that's a little bit sort of selfish and short-sighted because people are thinking about taxes and deregulation, but they're not really putting thought into tariffs because in 2017-18, when Trump pushed his tariffs through, there were two things. They were not universal. They were selective. So companies could always change where they went to source. And if you wanted to pass on the tariff increase, the American consumer wouldn't take it because they weren't used to inflation. If you go universal, and at the same time the consumer is used to inflation, I'm pretty convinced that 10 or 20% universal tariffs will automatically lead to inflation, will make the Fed's job more difficult. The market sort of gets this by going strong dollar and thinking about higher rates, but practically this could be very disruptive to global markets. If he gets it wrong, you can't walk it back quickly. And I think the inflationary consequences will be much sooner than people perceive. I personally think some of the COVID inflation we saw was pent-up inflation associated with companies that couldn't increase their pricing initially from the 2018 tariffs. So I think this could actually be, catastrophic is too big a word, but it could be quite painful because we are trying to crush inflation expectations. And if it rears its head again, because of what I would call a simplistic view of how tariffs impact the world. Everyone thinks because you price in dollar in the US is a price setter. But in sectors where you overwhelmingly import and everyone has the same price pressure at the same time, everyone raises prices. You don't do it when everyone doesn't because you fear losing market share. I mean, Turkey knows all about this inflationary pricing behavior.
So shall we forget about Fed rate cuts?
I think the Fed will watch, and I think they're smart enough to know if we start to see serious momentum associated with tariffs, they will go on hold. But I wouldn't say forget about it because there is still some scope initially, but what I think it means is we'll stay higher than the market anticipates for longer, and more problematically, inflation could start moving in the wrong direction. Then it's not impossible once we've seen the last cut, which may be in not too many months away, we could ultimately see as much risk that the next move is higher if Trump makes this mistake. It's a simple policy issue. If he goes universal, it will be inflationary. If he backs away from that, it's tough to back away from that though, because he's made a clear commitment to it. His policy advisors seem to believe in it because there was no inflation in 2018. They thought it works. But also people say, oh, it's just for negotiation, but you can't negotiate with the entire world.
Yeah, and he has this Robert Lighthizer
who believes strongly
on the team. Yes. So I think he'll go very, he will start with 60% tariffs, for example, for China.
That I treat as a separate issue because it doesn't create global broad-based inflation. I think universal tariffs on everything coming into the U.S., they have to back away from that specific policy. If they don't, I think the market's making a big mistake right now.
I see. So are we entering in a period where both the dollar and the interest rates will rise?
I would. The one thing about the dollar trade, it's just a trade because you can't invest in currencies over time. So as soon as the dollar has strengthened enough to where the market has responded to the Trump phenomenon, then I think the market will be challenged to understand what the Trump trade actually is. So I don't think if I'm right about the risk, I don't think it's dollar positive. I think there's a simplistic view because people think higher rates from the Fed for the time being with a little bit of inflation, but they don't worry about inflation as being a problem. My scenario is the U.S. gets it wrong with tariffs and it causes some risk associated with ultimately treasuries. And so I think it could be quite, I do think it could be quite problematic.
So what are the prospects for Europe with the upcoming elections in Germany also?
I think, my view ultimately is Europe is a big enough block. The UK is always more vulnerable because the currency can turn against you. You can import inflation. I think in this environment, will it be inflationary for the US? If they reciprocate with the tariffs, yes. Then we get it. But Europe's inflation is not a problem really in Europe at this time. So when I step back and think about the thing that will change is everyone's absolute belief that the US is working. I think everyone already knows that Europe is a little bit dysfunctional or not working as well as they'd like it to, and Europe seems to be acknowledging its problems, whereas the US isn't thinking about its budget deficit, for instance. So I'm sort of indifferent to what's going on in Europe politically. I'm a little more sensitive to what's going on in the UK, because I think the UK ultimately doesn't have the luxury of taking bad decisions.
I just asked this Europe because of the parity, actually, because, what do you expect in terms of euro-dollar parity? It's very important for Turkey's exports also, because everybody's started to expect 1 for euro-dollar parity.
Yeah, I think the bigger driver for Turkish exports is just the real currency appreciation. A strengthening dollar is I don't think it necessarily, it doesn't need to be as problematic because the choice is the central banks as to when they're going to let the currency go a bit in Turkey through building more aggressively reserves. The Turkish lira is not going to come under any pressure. So
you don't expect a pressure on Turkish lira?
No, I think the Turkish lira is almost beating to its own drum. You had this prolonged period where it was a dysfunctional market in terms of the low interest rates that were mismatched. Everyone can see that. They struggled to keep domestic depositors on board. They did. It succeeded. But the starting point was you don't have excess at all. We haven't had a massive bubble in any sort of way. The economy is not overheating. We've had inflation that's been driven by wages, but not by overheating of consumption. Look at every credit metric. Even though credit was extremely credit rates were ridiculously low, there was mortgage house sales. I think is a great indicator. You look at that and you think, where was the cheap credit? So the current account almost doesn't exist as a deficit right now. When has Turkey ever overheated with such a small current account deficit? So to me, it was all about wages. So the exporters have a problem because this real currency appreciation has happened because for too many years, the government allowed massive wage inflation, over 400% wage inflation in 2 years. It's insane. And at the same time, talking to the market like they were pursuing a disinflationary policy, but never really getting serious about it until really this last July when they didn't increase the minimum wage. So
what about this time in January? What do you expect?
Now, the market, a year and 2 years ago, no one in the market was talking about minimum wages. I mean, you look at most economic models and very few economists had the minimum wage in their model. Now that everyone's talking about it, it's super healthy, but it's yesterday's problem. Minimum wages were driving inflation because Turkey had a national wage policy these last 2 years. It took the market a while to figure that out, but Turkey had a stealth national wage policy that was driven by the minimum wage increase. Minimum wages were inflationary. Now minimum wages are deflationary. 0 in July, everyone thinks 25 to 30. 30 is fine. It's still 15 percentage points below last year's inflation. If we end up with that in January, it still will be a little bit painful for exporters because the wage bill will go up 30% in the first quarter.
So if the minimum wage increase will not be inflationary, so is it time to make a big increase, for example?
Oh, no. Making a big increase will turn it inflationary again, so they shouldn't. And the reality is the minimum wage isn't what people depend upon for their wages. It can be, but it should be ultimately a strong economy and some tension in the labor market. So my personal view is, where is inflation coming from right now? Minimum wage was 0 in July, but almost every company you talk to did 15 to 20% in July. So actually a lot of people got a windfall in July. And so the miss we saw in September, and October was actually, I think, better than people understand, but we're running at 3% now. What's driving that? If the minimum wage was 0, credit growth is not a problem, the currency is not causing any inflation. I think it's that lagged impact of the formal sector not breaking away again from the minimum wage increase. In January, I personally think we're going to see most formal economic actors following the minimum wage increase. If it's 30%, we won't see more than 35% in the private sector, with the exception of certain industries.
It will be a benchmark.
It will be a benchmark. It wasn't in July because we had so much overheating. And when I say overheating, it's the wrong word. We had so much stimulus associated with wages that the labor market was very tight. Mm-hmm. And when the government finally turns off the stimulus, the labor market was so tight, it was tough for any private sector company or any company to just follow that blindly. Mm-hmm. So I think the labor market will be a lot weaker in January. And that'll allow most companies to only increase in line with forward-looking expectations as opposed to backward. This is going to be a painful process.
Yeah. So is there a room for a rate cut in such a scenario?
Totally. I mean,
in December, for example.
In December, I mean, there's room for a rate cut, but I wouldn't do it. I think the central bank, every Turkish central bank governor before this one looked for every single possible excuse to cut. As soon as the market allowed it, they took advantage of it, and it had nothing to do with inflation expectations. It had everything to do with risk appetite. Mm-hmm. This central bank has credibility because they're saying we're going to be tight enough for inflation to become more anchored. Mm-hmm. Technically, it's almost impossible that they can't cut by February because the headline rate will be falling so much. By that logic, they could justify a cut in December, but I don't see the marginal benefit of getting ahead of the market because the credibility is so hard earned. And we know they're going to cut in January or February. Mm-hmm. And I would also wait for formality on the minimum wage increase. Mm-hmm. And January is always a big inflation month. I think it'll be fantastic when we see, there's a lot of deflationary pressure here. January is nowhere near 5% inflation. And then it looks very strong when they're then cutting subsequent to the January result. So, but what I'm telling people is it doesn't matter the timing. They'll definitely cut by February at the absolute latest. And from there, we see 250 basis point cuts almost persistently. The real rate right now at 50% relative to inflation, that's going to be 35% or so in the second quarter. That's a huge gap. That's going to mean Turkey's going to be a fantastic rate cutting story as we head into 2025.
So 2024 was a year where, foreign investors started to look at Turkey. Turkey created a good story and everything. We are coming towards the end and we are hoping for 2025. Mm-hmm. So do you think the macro picture is still attractive for foreign investors?
Well, it depends which foreign investor. The first foreign investor is fixed income, and they don't need an attractive macro picture. They just need an attractive fixed income picture. And that can be terrible for the consumer. Disinflation is not good for growth.
And they have
but
it
it's
now.
Great for fixed income. So this is one of the world's most spectacular fixed income opportunities. They've stayed short duration because the long duration yield has been depressed. But inflation will catch up to long duration. They'll add to duration in the first half of 2025. So a fantastic fixed income trade, right? And that's been clear for quite a while. It's no surprise. Equity is much more complicated because usually in Turkey, there's always something to buy because if domestic demand is weak, the currency is weak and exporters do well. And not just because the currency is weak, because there's free capacity. Exporters are under pressure because of the real currency appreciation. Domestic demand's only going to go south. So this is an environment where picking what to buy in Turkey is very problematic. Disinflation is not automatically equity friendly. Usually we love Turkey because currency is strong, fixed income is great, interest rates are falling, then the economy is doing extremely well. This is not going to be your typical cyclical recovery. When people talk about growth will return just because inflation falls, I don't buy that because the consumer is going to be wearing this disinflation. So the government should really take some more measures to cement disinflation because the longer it lasts, the longer the consumer is going to have to wear the pain.
So do you think that Turkey needs fiscal packets or, fiscal precautions?
Sorry. So I would say Turkey needs, it's not just a simple fiscal. They need targeted. Where's the problem? The problem is now coming from people that have discretionary income. The minimum wage earner was the problem before, and everyone, because everyone was just getting a wage increase. Now the minimum wage earner is a source of deflation, but it's everyone that has excess savings and getting these huge interest rates. Mm-hmm. It's everyone that got a 20% wage increase in July. So I would argue if you're not tightening fiscal just for the sake of tightening fiscal, you're tightening fiscal to take money out of people's pockets to accelerate the disinflation. So we get through this painful period quicker. The longer it lasts, the more the consumer is going to have to wear the pain. Mm-hmm.
So one last message for our Turkish viewers. I think you have been following Turkey for how many years? Maybe a Turkish message.
93'ten beri.
93'ten beri
evet.
Türkiye'yi izliyorsunuz. Evet. Nedir son mesajınız Türk izleyicilerine?
Son mesaj. Tekrar İngilizce olarak diyeceğim.
Okay.
One is we've had monetary policy recalibration. Two, we've had geopolitical recalibration. Geopolitical recession is over, as Mehmet Şimşek says. Two fantastic changes. But the biggest driver is ultimately domestic sentiment and the willingness for domestic economic actors not just to stay in Turkish deposits, which was the first challenge, but to actually invest in fixed assets that ultimately will generate jobs and take advantage of the cyclical recovery and the long-term structural improvement. For that, personally, I think we need to see some degree of political recalibration as well. And I think that's important because something is holding back fixed asset investors, and there isn't a belief in the structural story in Turkey right now. So the economy is going to work a lot better if we get a sense that domestic economic actors want to invest aggressively in Turkey again. That animal spirits of the Turkish economy, which I always loved, and the dynamism, it was easy to articulate that to people. Even though Turkey was boom bust, you knew it was going to recover strongly after a down period. It's much less obvious right now, and we can't take it for granted that that's going to happen just because of economic policy. I think we need to think about politics as well.
So we have to follow the politics also. Mike Harris, thank you so much for joining our program.
Çok mersi.